Hello and welcome to this Markets.com company profile on the Wachovia Corporation. I'm your host, Armando Gutierrez Jr., and thank you for joining us. Well, let's start off with some basic facts about Wachovia. The company's headquarters are located in Charlotte, North Carolina. In its current form, Wachovia Corporation was founded when First Union bought out Wachovia in 2001. It has approximately 120,000 employees worldwide and a market capitalization nearing $35 billion. Most of Wachovia's operations are based in the U.S., with branches heavily concentrated in areas based on other acquisitions of the company. Wachovia has 4 distinct divisions. They are general banking, wealth management, corporate and investment banking, and capital management. Robert Steele is the CEO, and its CFO is Tom Wirtz. The company's structure allows it not to have a COO. Let's talk stocks now. Wachovia shares are officially traded at 2 main national exchanges, those being the New York Stock Exchange, where it's primarily listed, and the Frankfurt Stock Exchange. The major indexes it is listed on is the S&P 500 in the United States. Taking a look now at the company's reported financials for 2007, Wachovia reported revenues came in at more than $56 billion with net earnings over $6 billion. As we look now at the balance sheet, total assets were $783 billion, while liabilities were $706 billion, equities making up the difference of nearly $77 billion. Going on to review some of the numbers, the debt-to-equity ratio of the firm was sitting at 0.669%. At the end of 2007, Wachovia had over 1.2 billion shares outstanding. On December 31st of that year, the stock closed at $38.03, while on August 12th of 2008, it closed at just $16. That's less than half the amount it did 8 months prior. More than $4.5 billion in dividends were paid out of the company's shareholders in 2007. Moving on to discuss operations, general banking is the biggest of the segments and consists of the deposit and loan operations. Wachovia General Banking segment is present in 21 states and offers home loans for all 50 states and auto loans in 46 states. General banking accounted for almost $18 billion of the company's revenue. On to wealth management. The segment serves as a financial advisory firm for high net worth individuals and includes insurance products. Next, we have the corporate and investment banking segment, which serves big business with their banking needs, as well as advising with capital raising and merger acquisition activities. Finally, capital management is the investment retirement arm of Wachovia and also provides security brokerage services. Now, Wachovia's vision for growth is not very clear, and that is due to the industry being the way it is at the moment, and with Wachovia having a new CEO, as well as an awful Q2 announcement, right now it seems that Wachovia is in the retrenchment stage. They're trying to sell non-core assets, which is, at this moment, an ambiguous statement, as they would not exactly explain what that meant during the conference call. Granted, there will probably be an explanation, but for now, it may be fair to say Wachovia is reassessing all of its operations. They announced huge job cuts and dividend cuts on July 22nd of this year in order to save them over $2 billion in the upcoming year. As for growth, well, it looks like it's onto the back burner until the balance sheet is in better condition. Now, Wachovia has been well known in the banking industry for its quick come-up in prominence through acquisitions over the last 2 decades. Now, it seems like the company is finally paying the price for acquisitions. In the last few years, the acquisitions of South Trust, West Corp, and of course, Golden West Financial were portrayed as the company getting into rapidly growing markets, whereas now it seems they bought into the southeastern U.S. and California housing markets. It's not right, however, to blame this bump on just the acquisitions. Agreed for Growth led it to have a very lax standards for loans coming from other banks. This is inherently seen in their pick-a-pay loans that are trying to rid themselves of now. This also has led to much higher non-performing loans than at-risk adverse banks. Their loan provisions in the last few quarters were lower compared to those of other banks. Having said all of that, considering the Q2 results, things are looking bleak. There are some things, however, that we can be sure of now. The risk managers at Wachovia are awake, and they will shore up their balance sheets and will sell assets if need be. Wachovia looks now so much like a company that is dying, but a company that needs some time before it will be back to walking with swagger. And that concludes this Markets.com company profile on Wachovia Corporation. I am your host, Armando Gutierrez Jr., and thank you for joining us.